Good morning. We're live. Hello, everybody. Hello, TikTok, Instagram, Facebook, YouTube. God, we stream so many places now. All our social media platforms, Twitch included. So just wanted to get you guys a warm welcome. We have a special guest with us. And see, I didn't want to butcher what you're gonna cover, brother. So what I'm gonna say is Cal is gonna cover life insurance plus. Well, let's say life insurance plus. Before we get started, I wanted to do my apology to Instagram. You guys know we love you, but we can't see you. I don't know why. We've tried and tried. We're on like month 6 of troubleshooting. For some reason, we cannot see the Instagram comments. So, that's it. Also, Tamaya is gonna be taking over today, y'all. Listen, look, y'all gonna hear a new voice. Y'all gonna get used to it. Everybody clap it up. You know, I'm excited. But before she gets on, so I want to introduce Cal Turner. Like I said, he's gonna be talking about insurance plus, because insurance is more than just, it's more than just life and death. It's a lot more that goes into it. And this brother here, he knows his stuff. So Cal, if you want to give the people, a little introduction about yourself, and we can get it started.
Yeah, how you doing, everybody? I want to start off by saying I really consider myself a risk advisor, and life insurance, that's life insurance agent, broker. Those things don't really speak to what I do, really. I do a little bit more than that. So I like to consider myself a risk advisor, and I obviously assess risk based on maybe investments and or insurance in a way. So we cover estate planning, which is life insurance, and hopefully we can change the narrative of that and what that really means, and and how that interfaces with you now and later. Okay, and on so many fronts. So whether you're a guy that or woman or man that's looking for investments, looking to protect your money. There's so many things that we deal with now in the economy when it comes to our money and what to do with it. And life insurance can play a big factor in helping you decide what to do with it, and hopefully some things that I'll cover today. So thank you for having me on.
No problem. Okay. So with that being said, Tom, I know you're taking over. I just wanted to say, our questions and our preliminary questions are kind of geared toward the life insurance. But what I'm asking you, if you can go in depth once we ask our questions, or once our guests ask the questions, we all open ears. I'm definitely hearing more about it.
Oh yeah. Can't wait.
All right. Hey, there you go, T.
All right. So our first question: what types of insurance do you offer?
All right. So mostly any organization, like I said before, I broker to some of the best financial institutions in the country. So your 3 main types of insurances, that are offered, that I offer, is term. You've probably heard of term before. Okay. And that's a temporary need. So that's this. I want people to understand that is temporary. That's not a forever. Most of us in the community, we think term is the end all be all. We have another form of insurance called an ROP, and that's called return, and that stands for return on premium or return of premium. That's also a term as well, but it has a different function. And lastly, we have something called permanent. Okay. And that is exactly what it sounds like. It's a permanent life insurance policy that lasts you from the day that it goes in or is active to the day your last day on earth.
Hmm.
Okay. So that's a forever insurance.
That's the one we need. That's that. Well, I mean, I'm sure that all three of them had their perks, right? But
Yeah, yeah, yeah.
perm sounds like the one that's the deaf one. That's
Yep.
the
And what you might have heard, KP, Tamara, what you guys might have heard before, you might have heard of whole life. Have you heard of those terms
mm-hmm.
before? Okay. That's a form of permanent. And then there's a universal life, and there's different variants of universal life. Um, and to play in those, then there's some investment factors depending on the type of permanent that you want to get into. But those are your three main types: your term, which is a temporary policy; your ROP, which is a temporary policy with a return on premium. Return on premium means everything that you put into that policy, unlike any other insurance that you have, like your car insurance, homeowners insurance, doesn't pay you back. An ROP returns every premium, every dollar that you put into it to pay for that term. At the end of that term, if it's a 20-year term, 30-year term, it'll give all of it back to you.
It sounds expensive, don't it? I mean, I don't know why. It sounds like that one sounds like the most expensive option. If the bank's gonna give you your money back, I feel like you're gonna be paying them to give you your money back.
And here's the thing. Let me say this. There's a difference between understanding what I want people to understand is insurance.
Oh, he froze.
Oh, he
Did
froze.
he freeze?
Yeah,
Yeah.
he
Oh
did.
man.
Damn. Listen, he's about to say. No, he's about to say something fire. All right, y'all.
Oh
Well,
no.
we got our first pause, y'all. Oh,
Yeah,
there
yeah,
you
yeah.
go.
I
There
got
you
it. I
go.
got it.
You paused, Kyle. So all we heard was is insurance. You said you wanted us to understand and insurance, and then
Yeah. So what I wanted you to understand with insurance, to your question about the ROP and them giving you money back, you like car insurance or homeowners insurance, you pay an institution, you pay an insurance institution to take your risk.
right.
You understand that concept? So when we purchase insurance, understand that we purchase insurance for an institution to take our risk. We pay a car insurance company to take our risk. We're not paying the 50,000, 100,000. We get into an accident. We ain't paying for medical bills. We're not doing none of that. So we pay an institution to take that risk for us. Now I want everybody to keep that in mind when we talk about insurance moving forward.
Okay. Let's hit the next
Yeah.
one.
All right. So, what are the coverage limits and deductibles for each policy?
So there's no deductibles because this is not car insurance and this is not homeowners insurance or anything like that. Um, there's premiums. So coverages, you can get as much coverage you want or as little coverage as you want. Depending on the child or not child, but depending on the age, whether it be a child or an adult. And I'll go to the age. I mean, you can cover a child up to 2 weeks old. Okay, but there'll be a minimum coverage if anything with that. And a lot of companies they try to fall around 50,000 for a minimum coverage, if you will. If we're looking at typical, excuse me, we're looking at typical, let's say, like term or permanent insurance that you want to get on anybody, whether it be a child or adult. So there's really no limits. It's just that if you want $2 million, you just have to be willing to accept what the premium would be monthly for a $2 million policy, and that will vary based on a term and a permanent. Permanent will be more expensive, obviously, because of how it functions. It's a forever policy, right? So, uh, but yeah, coverage limits is really whatever you want. and that would equate to a certain premium. So there's no deductibles.
Does that apply for like for all, like you said, term, perm, ROP? I wrote ROP.
ROP.
Yeah.
Mm-hmm.
And then universe. So out of all of those different types of policies, you pretty much, we've set our own limits. There's
Yeah,
no
you can ask for
predetermined
whatever
limit?
you want. Yeah, you can ask for whatever you want.
I always thought it was predetermined. Look, I'm glad you said that.
No. So when we start to get into predetermined things, I will say this from a risk, all right. So a financial institution that uh their main thing is risk, right? Which that's what insurance is. They will, they will in some instances look at how much money you make, right? And they won't let the potential in insuree uh I want to say overexert themselves with payments that they can't make. You know what I mean? So if you only make $30,000 a year and you're looking for a $2 million policy, and that may, and that policy may cost you $500-$600 a month, they may look at how much money you make in an annual period and they say, hey, we're only good with 10% of what he brings in monthly, and then we would have to adjust coverages. So I will say it's a case by case basis, but if you can afford it, you can set limits to whatever you need, whatever your insurable need is.
I
Okay.
have a question too.
Sure.
Is it true that like the older you get, the more expensive your policy is?
Absolutely. So let me explain why. Right. You're at more risk of what passing the older you get. Right. So I'll use car insurance as a just as an example. Why do they charge more as you're younger for car insurance versus when you get older, right? So what they're doing is they're assessing risk based on age. So in that industry, you're more what? Irresponsible at a younger age. That's what they believe, right? So you'll pay more on the front end. With life insurance, right? You're paying for someone to cover what your maybe your estate, or you're paying for a certain amount of money. You understand what I'm saying? And the older you get, the closer you are for them closer you are to death for them to pay that out.
That
So
makes sense.
yeah, so basically it's riskier as you get older with life insurance. Car insurance is riskier the younger you are, just as an example. So
Yeah.
yes, it's a mortality rate or
That's what I was
mortality.
gonna say. It's like the older you get, you're getting closer to
Right.
that time. You know what I'm
Yep,
saying?
absolutely. So it's
Hate to-
always great to grab this as young as you can.
Mm.
As
So
young as
when you're younger, I guess let's say 18. Let's use 18 and 38. Obviously, the 18-year-old is gonna have a lower policy number,
super cheap.
but
Mhm.
when the 18-year-old turns 38, they kept that same policy price like through all the way through.
Yeah. So here's the way it goes, right? You want to try to grab it as young as you can, right? Because obviously it's lesser. Yeah, it's a less amount of or cost of insurance for you. Um, Normally your premium that you start off with, you're going to continue to pay that premium through the totality of the contract. So it's good to try to get in. It's when it starts to cost more to a client, if you will, when they purchase a term, and I see it all the time. They'll purchase a term and then it expires, and then they'll go in and try to purchase more insurance or convert it. And guess what? You're older now. So it's going to cost you more.
Yeah.
So, like, even for my children, all my children, they not even teenagers. Everybody has a permanent policy.
So
You
a
know,
term policy, is that like maybe somebody purchasing a policy for maybe 5 years and after that it's over?
there are term like that, but a lot of people, when we have people come to us, the insurance man comes and sit in front of you and I for the most part, right? They try to sell you term. A lot of them sell you term. Because when we get into permanent, there's a lot of other factors that you have to consider. Right, we're going to talk about your investment, how it's going to turn out for you. We're going to talk about retirement. There's going to be a lot of things that is a plus when you start using a permanent than you don't have with a term. So a lot of times, I hate to say it, but you do have some people out here who push term to you, and you really, that's not the best policy for you, right? So terms can go from 10, 15, 25, 30, 35 years. It all depends on the carrier that you go to seek it. Um, but like I said, and we'll get into the differences of why they're important, the term and the permanent.
That's what I was getting ready to ask because it sounds like, I mean, and we've heard this before, but term just doesn't sound good at all. I mean,
Right.
I mean, if you can explain why it is, but it just like every time we hear the differences, it's almost like stay away from term. Like, I mean, unless you plan on dying in the next 5 years, why would I get a 5-year policy?
So from a strategic standpoint, KP, like I would only position a client with a term to cover maybe a certain debt within a certain point, right? So normally when we do term to cover a debt portion. Let's just say, for example, because in some instances we can get what we call decreasing. So we would get a term policy to cover, like when you hear mortgage protection. Mortgage protection is like a term, and what it is as you pay your mortgage down, so does uh, your term policy will decrease at the same time till you don't need it anymore. Remember, it's temporary, right? So remember, term is used for is a temporary need, and we have to decide what that temporary need may be. Okay, but we normally use term as a permanent solution. That's the way it's positioned to us as a permanent solution.
Gotcha.
Okay, um, so yeah, like I said, term we use for just temporary needs, and that would be defined like me going through your financials, your debt that you have going on. Like we're gonna have some candid talk, and I'm a risk advisor, right? So we're gonna decide if you need it or if you don't need it. But a lot of us use it as an end all be all, and you don't even see the benefit in it. That's why I think in the community, when you talk about life insurance, that's not a sexy conversation because what you've been exposed to. And then on the other hand, think about it. When you come across new information or a new subject matter, you either reject it, right? Or you get mad because you don't understand it, or mad at the person delivering the information because you can't absorb what he's telling you. KP, you probably been through it talking about, going through the credit stuff.
I do it when I
So
talk to Sharnice.
there you go. There you go. There you go. So yeah, man. I mean, listen, and then eventually you got to look at it like this. You feel it. You have a feeling of insecurity, and then you find yourself being distracted by other things, and you never learn yourself on the things that you should. And the only thing that I ask anybody that's listening today is, just ask why it's important, how can you apply it, and what are the benefits of it, and just look at it from that simple standpoint.
Yeah.
There you go. All right, let's move to the actually before you read this next one, I got one. So Cal, can you kind of give us like a soft walkthrough of how you would prepare a client? Like because I know you talk about taxes and prep and all of that stuff. You could use a realistic example, or you could use me or however you want to go about it. But like I think I'm more curious to see like the totality of like the game plan. Because when you hear it, you hear the IUL policy, which I know a little bit about. They're pretty good with using your money as your own bank and all of that stuff. You got to know what you're actually doing to do it, but that's not all is what I'm hearing from you. It's like it ain't just that, it's more to it.
Yeah, there's a lot more to it. So normally if I sit down with a client, right, we'll go over, or we'll try to find an insurable need, right? Because there's all different types of products out here. And also as a risk advisor, I'm gonna say it again, that's a broker. I also use annuities, which is also an insurance product. So a lot of people don't understand that you have insurance on your money. You'll insure your car, you'll insure your house, but a lot of people don't think about what's the insurance on my money? You out here making it, but we ain't got no insurance on it. So
I
I'll get in it right. You know what I mean? Because a
didn't know
lot,
that was the thing. Like when you
yeah,
said it, I'm like, wait, what?
yeah,
Insurance on my money?
yeah.
Ain't the banks
There's insurance.
insured?
Yeah, there's insurance on your money to ensure that you never run out of money your entire life.
Okay.
Yeah. But we are so programmed to what? Go hard, stack your cake, stack your money, stack your bills, right?
Mhm.
And then pridefully, mentally, we move and we make decisions based on the fact that we believe that we're high net worth individuals. And that's enough. Really think about it. Because how many people brag about how much money they make? Oh
200.
man, I'm doing, 200 this year, 300, right? But you have
Mhm.
nothing in place. Prime example. Prime example, and I'm gonna get back to your question, KP. Um, what's the brother that just died, that just passed away? They got killed in California.
Take off. Oh no.
In
Off,
California.
you talking about one of the Migos?
No, the one from Philly. Uh,
I forgot his name. I think you talking about 50 Cent boy? The one
the light
nah.
skin guy, PNB Rock.
Yeah,
Oh.
yeah. I was
PNB Rock. And I don't know if you guys caught it, but it was a big wave where his girl, his baby, his child's mother went on live and was like, yo, he ain't leave nothing.
yeah.
Like, we wasn't set up right. You understand? So that go deeper than just saying, "Oh, I got life insurance, and when somebody dies, it's gonna pay out." It go way deeper than that. But I'll get into that. So go back to your question, KP. The way that I would, find your insurable need, we would sit down, we'll go over how much money you make, right? How much debt you have. If you have any interest in your children, like, what do you want to do with your children in the future? Like, you want them to go to college? Do you want to cover that? Do we want to create something where you ain't got to come out your pocket for it? Like, you know what I mean? Like, there's so many things that we go
That
over.
out. Let's go with
Huh?
that. Let's go with that out.
You know what I mean? So many things that we go over, and what we normally use, just to simplify it, is called a dime method. Like the word DIME, dime method. So we normally kind of go through that, and once we get all those numbers, then we start to have a deeper conversation on what I make. And this also, listen, and this also goes into what type of money do you want to have in the next 5, 10, 15, 20, 30 years. So it go deeper. It's a little bit of financial planning involved if you look at it. But that's how normally we would set up a client. We find up the we use or try to find the insurable need, and by using what we call a dime method: debt, income. D is for debt, I is for income, right? Things like that. College. We'll go through a whole lot of stuff, and we'll decide what you're comfortable with. So I'm on your side. Yeah, yeah. I'm your teammate at that point.
Okay. Now I guess with the setting up for your planning and your game planning, is that something that they would pay you for, or is it something that you help them set up and they pay, monthly, or
They don't
how
pay me. They don't pay me at all.
okay.
That's all free. I don't get paid by you. I get paid by the financial institution that I align you with. That's
Gotcha.
best suited for you.
No, that makes sense.
So understand, I will also say this, just a little so you understand. Most banks lean on insurance companies. The most stable companies in the entire world are insurance companies, contrary to what you believe.
No, I figured that much. I
Yeah.
mean, they control everything: health, medical, life.
Yeah. Because you got to think about it from a bank standpoint. And even if you look at it during the last, what we call, they say we don't have a recession, or just look at COVID, right? If I ask you, how does a bank make money? You'll say, oh, well, they get interest from loans that they lend out to people. They lend out money you're going to tell me generalized things that we maybe commonly know.
Right.
But they'll tell you to go ahead and we're also going to talk about simple interest and compound interest as well. So the way loans are put together, they're put together in what we call simple interest. But they purchase life insurance. They purchase large amounts of life insurance contracts to support their financial system, because there's a guarantee there that otherwise wouldn't exist unless they had it. So what you may hear it to be is what we call BOLI in some instances, BOLI, BOLI, bank-owned life insurance. So that money that you give them, there's a large portion that they push out. Because if I ask you, how does a bank stay in business if nobody paying their bills? Let's just use COVID for the last couple years. All these people ain't paying mortgages, can't pay car loans, right? And it's all these things that the government was pushing out that put money in people's pockets, right?
That's what I was about to say. I figured it was government bailouts. That's above my pay grade, but that's right. You know, I use the general term, but I'm like, man, the government gonna save them.
Right. So think about it. Is it guaranteed that I'm going to pay my bill? You give me a loan, but is it guaranteed that I'm going to pay my bill on time or pay it at all? It's not. Yeah. So how do I hedge that gamble? I buy life insurance that is guaranteed to me. So I invest my money in that, and I get market returns, right? Because when you talk about investing money, everybody thinks about stock market. When you think about investing your money and growing your money, what's the first thing come to mind?
Yeah, that's S&P 500. That's the first
there you go.
Yeah.
There you go. That's the standard, right? That's the standard. But it's so nuanced, right? It's just rules of thumb. So when you go off of things that are absolute in life, the things that are just rules of thumb, you make them absolutes, and that's not the truth. Sorry, man. I'm all right. So listen.
We started preaching a little bit. I'm sitting like,
yeah. So look, it says, how do you file a claim and what's the claims process? Right? You file a claim, you give me a call, or you call the insurance company that we have the contract with. It's that simple. You know, and the only time you will file a claim, let me give you an example. So there's a thing called living benefits. So when you purchase permanent life insurance, there's a rider, or nowadays mostly all permanent life insurance contracts have what we call living benefits. Now, what is living benefits? It's an accelerated benefit that gives you access to your death benefit. So when you go purchase a policy and you say, hey, I want $500,000 or I want $1 million, it can give you it can give you access up to 90% of that in the event that you need to access it. So this is where living benefits come in: terminal, chronic, or critical injury or illness. So this is another portion when I say protect your money. So our biggest asset is us, right? If you can't get up and get on the phone and get out there and get your 2 feet going, you ain't making no bread. So how do we put insurance on us, right? That's what I'm saying. This is the income portion. We can't just, rely on the fact that, we getting a couple of dollars now. I'm doing 20 or 30 grand a month, something like that. You can't just rely on that, because if you get jammed up, you're gonna lose out on money. So what that does is, if you ever get sick, terminal, critical illness, injury, anything like that, or 2 out of 6 daily living activities, which would be bathing, dressing, toileting, transferring means getting in and up and out of bed, eating, continence, which is really can't control your bladder or your bowels or whatnot. Only 2 out of those 6 that I just named. If you can't do any of them, or you have a problem with any of them, outside of all the other things that this will cover you for, you can get access to 90% of your death benefit, or depending on the situation, you can have income payments coming to you for 5 years.
That's while living or after?
While living.
Okay.
That's why it's living benefits. This is why I say I hope we can change the understanding of what life insurance means, because everybody that knows about it, they use it while they're alive. It's not I'm gonna wait till I die to benefit from it.
Right.
What I teach clients is you use life insurance to pass on to your children.
Mm-hmm.
So now we're talking about estate planning, trusts, things like that, right? So, yeah. So that that's the way that goes. And in that situation, that's how we would, let's say, if there's a claim that we want to make and access that money, we would do it that way. If you have living benefits attached to your policy contract.
How is that something you established beforehand, or how
Yeah.
would you know if you have those?
No, that's something me and you gonna talk about. Me personally, I don't put any contract in place without it.
Okay.
You know what I mean? So even if you don't even know that you got it, I'm gonna make sure it's on there. Okay. You can also get living benefits attached to term policies as well. Obviously the premium is going to be a little higher than what a term is, a basic term with nothing on it. But remember, I said it all depends. We'll talk about it. Maybe it's a financial thing. Hey, man, I can't afford the perm. All right, we're going to get you term with the living benefits. At least your income is protected in the event that you get over, 15, 20 years that you get something may happen. You
Right.
may be vacationing somewhere and break your ankle or something. You want to have it in place.
I didn't realize it could be going. It went that deep. I always thought that, like what you just described, I thought that was for like medical insurance. I didn't know that I would be able to use my life insurance to help me in a medical situation.
Yeah. So yeah, think about it. People use life insurance now, during, and after. It's just you got to educate yourself on it now, and that's just part of the claims process. But I mean, any other specific questions you guys have? You know what I mean? In regards to I don't know, IULs, being your own bank.
Tamaya, I got two more for you, Tamaya.
Okay.
Oh, here we go. Yeah.
All right. So how can I lower my premium without losing coverage?
So if you already have an active policy, we can always try to find another, or purchase another contract that gives you a lower rate for the most part. So even though one company says, okay, you're 32 years old and you're going to pay $110 a month for your policy, and you really like, man, I really want to, I wonder if I can lower that. Then I would come in place as a broker, and I would go to every institution that's A+ or A- rated. That's another thing too. So always ensure that the policies that you're looking, or contracts that you're looking to put in place, make sure they're coming from an A- carrier at the minimum. That means they're financially stable, and most likely they've probably been around since the 1800s.
That's the insurance company.
Yeah. Mm-hmm.
Shit, I ain't even know. I ain't gonna lie to you. I ain't know they had insurance that long. Like I thought insurance was like a 1990s kind of thing.
Nah, brother. Listen, I'm contracted with the company. I deal with the company that issued the first policy to Bonnie and Clyde.
Wait,
They've been around for a minute.
you talking about the criminals? So wait,
Yeah,
they
the criminals. The criminals.
Yes.
Yeah.
So hold on. All right, question, because I know it goes into deep depth like that. So like, and I know you don't know their actual policy, but let's just say I have a policy on me and Jazz, right?
Yep.
And we decide we want to be criminals and something bad happens. Would that void the? Are there? I guess that's a question. Are there things that you could do, obviously negatively, that would void your policy out?
Now, once it's in place, it's in place. So if you get it now and then you decide that you want to be, you know what I mean? I don't know, you bank robbers or whatnot. Because remember, risk. Always, I want you to look at insurance as a risk factor, removing risk from your life, which is contrary to investments. When you look at investments legally defined come with risk. Okay. And then you have to determine what level of risk you're willing to take when you start dealing with investments. Insurance, on the other hand, um, I'm paying someone to remove all the risks that I don't want to deal with in my life, no matter what it is.
Okay. I mean, and like you said, they can't. It's not like they're gonna predetermine. Like, all right, KP, you look like you seem like a stand-up guy. You know, you have a business, you're married, you have children. They wouldn't know that I'm planning on robbing
No.
the bank. You know, so it's like,
So what they normally do, KP, is they'll look at your driving record. So when we submit an application for a contract to put a contract or enforce it, they'll look at they'll try to consider how risky you are. Remember, age is one factor of risk, how old you are, right? But anybody can get insurance, man, whether they 70, 60, it doesn't matter. But anyway, then they'll look at hobbies, activities, and things that you do. So if you say, yo, I'm a skydiver, that may put you in
yeah, the high
another
risk.
category,
You jumping out,
right?
you risking your life every day.
Right. Does it mean you can't get insurance? No, they don't insure you, but they say, hey, guess what? Since you're a risky individual, instead of you paying 110, you got to pay 150 for you for your policy. So basically, your premium is based on factors of risk. So they'll look at your driving history, right? They'll do I want to say a soft check on your background. You know what I mean? And a lot of people say, do you have to have good credit? They're not worried about that. they just want to look at, is he a risky guy? Is he swimming with alligators and sharks and stuff like that on the weekends?
I got one from TikTok, Ray Bay. Jesus, they will never. I will never read a not funny name, but it says, "Can I get insurance on my business?" I guess I don't know what kind of insurance he's asking, but that's what the question was. Can I get insurance on my business? It don't say for, it just says on my business.
So we have something called key persons insurance, which you can put in place as a business owner and have insurable need on key players or key persons in your business, right? Which will also act and function similar to what I've told you about permanent insurance and things like that. And you can use these things for maybe working capital and things like that in the event that you need it.
Oh, and
so yes, there is a type of life insurance that you can put in place in your business called key persons.
I mean, I guess not. How does it work? But like, let's use me for example. Would I be the key person of my business? So like, does that mean if something happens to the business, I get money, or if something happens to me, the business gets money?
So if it's just on you, yes, then it'd be just on you. But you have it as far as you have it on yourself under your business name, if you will, which also becomes a write-off and things like that into your business. Personal insurance, you can't write it off. So if you just got it on KP, you know what I mean?
Oh shit.
Then you can't write it off. But if you get a key persons on your business, and then let's say you're growing your business and one of the lovely ladies here is added as a key persons into your organization, then you can insure them. So if they ever get sick or anything happens to them and it's going to impact your business from a financial standpoint, then you can also recoup.
Question. So you telling me so these businesses that have insurance policies on their employees, they're ensuring their protection?
Fortune 100, for Fortune 100, 500 companies, they all do it. They're even starting to do it with NFL players, man. NFL players, coaches. I think Jim Harbaugh has something in place where they had a policy or key persons policy in place to cover his contract. Jesus. So also understand, we also have something where we're using insurance money to as collateral, or we're using certain things as collateral to cover debt. Instead of you, so I want you to look at it like this too, KP. Like when you go get a loan from a bank, who is collateral? What is collateral?
It's like a substitute, or not a substitute, but like something that you're going to use and replace anything that's lost or something like that. I don't know I couldn't
No,
give
you are. No,
definition.
you are.
Oh,
You
you're
are.
asking who's the collateral. I thought you were
Yeah,
saying
you
what
are the
is
collateral. When you put your social security number on the loan, you're the collateral. If you don't, so I'm gonna answer a question here. Guy says I'm a life and health insurance producer. If they are a person who is key to the operation of business, absolutely. And that's what I mean. So if you bring somebody in and they're key, they're key to your business operating, right? There has to be an insurable need there. But yes, that's exactly what we covered, whoever that is.
So
it
when you
says safety user.
when you said that, I was thinking about how a lot of these record labels put insurance policies on their, rappers, probably everybody, but they really
Yes.
cash out when something
Yeah.
happens.
Yeah. Yeah. So whatever you define as your key operation, like who's key to your operation, who's key to you, if they were gone or if they were inoperable, you're losing money.
Mhm.
So when you look at CEOs and VPs and executives, they use this. Now, back again, KP. So when we go get a loan from the bank, who's the collateral?
We are now. Yeah.
You are. You are. You or your business. So depending on what loan we're getting and what institution and what we're trying to achieve, you or your business is the collateral. You understand? So if you don't pay up, they coming to get you. Where back in the day, before all of this, remember, for you to get a loan, you would have to what? Offer up collateral.
I mean,
People are using life
now,
insurance. Go ahead.
don't you? It's still certain loans where they need collateral, right? Like the high risk loans.
Depending, right. So there's a risk factor. They may say, hey, what do you have in your 401k? What do you have here? What do you have this? Did you know that the SBA uses what they call collateral assignment to cover a loan? So if you wanted to go get a loan and you didn't really have the money or you didn't have the credit in certain instances or whatever, you can use a policy as collateral. It's called collateral assignment to get a loan, whether it be the bank, but I know the SBA actually partakes in this as well. So life insurance goes way deeper than what you think it is. When you get life insurance, that's an asset.
Yeah, I didn't know that.
It's not a liability.
I,
So now we're
well,
moving out of the realm of common understanding and knowledge of what these things are and how everybody else in the world uses, I ain't gonna say in the world, but everybody else uses these things to become wealthy,
I knew that.
position themselves.
I knew that about the using it for wealth. Um, Speaking of wealth, it was damn. You had touched on it like a couple points. I guess like as business owners, well, not necessarily us, but if
Mhm.
you have a business and you're running it, it sounds like, and it, I mean, it doesn't even sound unethical at this point. Like the more you
No,
break it down, it sounds like I can insure my employees. They would pay their own policies, but I have the insurance under the business.
so when we're talking about key persons, remember again, it has to be an insurable need. They have to be a key to your.
Right.
You understand what I'm saying? Um, you're talking about it like a general, like though I don't want you to think of it like back when we was 401k employees and we and we
Yeah,
had
that's how I was looking at. I'm
workman's
thinking like Walmart.
compensation.
I'm
No,
thinking
because
about like
workman's
a Walmart
compensation is
cashier.
insurance as well, KP. Workman's compensation is insurance as well, right?
Mhm.
So that would be from their standpoint, the workers, they would put insurance or they would have that in place for their employees. But when we're talking about key persons, right, that's a different type of insurance.
Okay. So I think that's what's throwing me off. Not necessarily throwing me off, but I think that's why I'm getting confused. Because when I'm thinking about it, I'm like, look, the Walmart probably has hundreds of thousands of employees, and
Mhm.
they're all required to have insurance. So I'm like, you telling me Walmart's
Mhm.
making money?
See, I think
Over-
they got in trouble for that. I don't know if that's I saw something on that. I have to look into that. I could have swore they got in trouble for like taking out policies on employees without them really like knowing or
Dang.
unaware. And
Because I got quite a few employees, and I'm trying to think like, you know what I'm saying? Talk to me. what I gotta do? Look, Elevation Academy. I ain't gonna say we might want. As the bigger we get, this might be something that we might need. You know what I'm saying? Listen,
yeah, absolutely.
You joining the academy? Go ahead, sign this insurance claim. This insurance.
Yeah. We say maybe like a business partner or someone who contributes so much to the business that if they pass away, the business would suffer. Absolutely.
Oh, okay. So you talking about like
That's
like us three, like
yes.
because it's 4 of us in the Elevation Academy. So
yes,
would all 4 of us equally be key? Would it be like a 25% split, or will we just have 4 key persons?
No, you would just whoever you define as a key person. Let me. You understand what I'm saying? So they have a position. They have a position. I mean, you may just only have one. You may have 2. You understand what I'm saying? So my point being is that yes, it's what the guy just said here. Business partner, anybody that's integral to your business. If anything were to happen to them, could you function? Would it be a major blow to your business? It could be.
I mean, if anything was to happen to my business partner, I could function.
Would the business suffer? Right, like the gentleman said here. You understand? Would you have an impact to your business if let's say one of these ladies?
Right. That's what I'm saying. That was the joke I was saying. It's like if Shanice just disappeared, I'd be like, damn, where'd she go? But I mean, I'd go back to business as usual.
Right.
Hey, bro. Hey, Shanice ain't responding like 3 days, bro. Y'all good?
Right.
Y'all good?
Right. Absolutely.
But yeah, I think I get it. I get it. It's making more sense, you know, and it's good though because this is the unknown. This is the world. This is like you said. It's not that I was ignorant to the knowledge. It's just the unknown of the unknown. I didn't know that this existed to even know to try to look into it.
So I'll give you some history. McDonald's used a life insurance policy to keep his business up. Pamper Chef, if you ever see those products, Pamper Chef, they use life insurance to elevate their business or get their business off the ground. Disney did the same thing.
Oh, Disney, and so that's a winner,
right there. So you see what I mean? You have to understand that there are J.C. Penney's. Like, listen, man, I'm telling you. Like a lot of people, like for example, I'll give you some historical gems. Benjamin Franklin had an annuity.
Wait, hold on. Benjamin Franklin, the president? Wait, Benjamin Franklin wasn't no president. My bad. You talking about Benjamin Franklin, cuz that was on a $100 bill.
Nice.
It's all good.
Hey, listen.
It's all good. It's early in the morning.
Said the inventor, like Jesus. No.
When I think of money, I think presidents, and I think all the presidents and the dollars. But Benjamin Franklin wasn't the president. You know what I'm saying?
But he was a forefather, if you will.
This is the perfect zone. He was a key person.
Right. So I'm gonna switch real quick. He had an annuity. So annuities have been around since, man, like as early as 2000 BC. But what? You don't hear about them, right? You hear about 401ks, IRAs, and everything else. Stock, a lot of stock focus. Products like that. Products that come with risk.
Mm-hmm.
Anyways, annuities have been around for a very, very, very long time, and we call them self-directed pensions. So what's a pension? As entrepreneurs, anybody that's an entrepreneur on this line that's listening, how do you ensure that you never run out of money? How do you create a retirement for yourself?
With insurance, right?
Here you go. And it's not stocks.
Yeah.
That's a portion of it. But we'll get into the rule of 100 at if we can get around to it to explain that. But Benjamin Franklin had an annuity for Philadelphia and Boston that paid out for over 200 years. When he passed away, listen to me.
Listen,
he passed away. He passed away, and it paid out to his beneficiaries. He left to the city of Philadelphia and Boston for over 200 years until they actually just, you know what, we're just going to take all the money out of it.
That's crazy. Who decided to take the money? Like 200 years, family ain't.
So an annuity ensures that you never run out of money. It will, you know, it will prevail till death or after you, even after you die.
They put a cap on it now, though, I would imagine.
No, there's no cap.
There's no cap. So 200 years after I'm gone.
If there's still money to be had, yes, it's gonna keep paying out.
Look, you see what I'm saying? It's like that. It makes sense, but it's like, damn, like you telling me that this money
is it that simple? Is it that simple, KP?
Like,
is that what you're saying? Is it that simple?
Because I mean, it sounds like it is that simple, but we just don't understand it.
Absolutely. I'm just giving you an example of the power of an annuity. That's what I'm saying, and what people before us always use it. Babe Ruth had an annuity. Oh gosh, man. Beethoven, there's a bunch of people who had annuities. That is what they use. See, 401ks and all that stuff is new. All that stuff is new. Prior to 401ks, how did we ensure, say, our grandmothers or mothers and fathers, what did they use to for their retirement? They waited on that pension. And what did the pension do? The pension would give them a certain amount of money every month for the rest of their life. But a pension is paid out of what? Out of profit. Let me give you some gems here. So why would I come up with a 401k?
Well, I was thinking the pension, is that why they say like the pension it goes down, or like they're saying, oh, the pension isn't going to be that much this year? Because I didn't never understand it. But if
no, that's Social Security. They talk about Social Security, which is a form of a pension. Social Security is a form of pension, but that's a government subsidy, right? That's a government benefit. That's why they say it's not going to be enough money or whatever. They keep saying that it's not going to be enough money to pay out or whatever to everybody who is paid into it. But just to give you an idea, like you think about it, if I'm a company and I know I have to pay a pension out, that I know that pension is paid out of, let's just say, profit, and I introduce 401k with a match.
Right.
So everything that I give you, right? Everything that I give you, I then can write it off. That's cool. Go ahead. You want to put 4 or 5% in? Go ahead, put the 4 or 5. We'll match it 4 or 5%. Guess what? I get to write that off.
Right.
As a business. So hold on. But this is from a 401k standpoint. So think about this. Now, I found a way to save money, and all your money. So when you put your money in a 401k, who gets it?
It's sitting in the bank.
No, your 401k is comprised of what? Companies, stock, mutual funds. It's still market driven. So all your money, you're putting what? So when you buy a stock, when you buy a company or buy into a company, you're buying a position, right, or favor into a company. You're giving them more money to do what? Invest. For you to get a return back. And you sitting in the market hoping that Apple or somebody shoots up to $2,000 a share and you get rich. Now, is that realistic?
I mean, the way that you broke it down, not really, because it's almost like you hoping instead of actually doing it strategically.
Keyword. You said it. You said it. It's a difference between living intentionally and hoping.
No,
So you just said it there. So when we have been accustomed to these concepts all our lives. And what I say, KP, and you can probably use yourself as an example. So when somebody comes to you with something new, the first thing that we think in our community that's bull crap or it's a scam. Because I ain't never heard of it before. And get out my face with all the nonsense, right? Because I know what I know. I know what I know.
It's like if you don't the way that it's presented. So like the way that you're presenting it, because I'm in the space that I'm in, I understand it.
Yep.
But honestly, you know, if you were to present this to me 10 years ago, 100%, like you just said, I'd be, yo, get out my face, dog. What you talking about? Like, what you talking about? How life is, you know, I'm immediately gonna just dismiss you because I don't know the benefits, I don't see the benefits, and I guess the environment I was in doesn't have those benefits. You know what I'm saying?
Yeah, absolutely, absolutely. So let's look at it like this, right? You know, the biggest thing coming right now is be your own bank. Everybody hear it all over the place, and it could be so nuanced. You're like, man, I'm so tired of hearing about that. Be your own bank. You know what I mean? You know, you hear it all the time,
Yeah.
but we don't understand it, right? But understand that these contracts are governed by the IRS, so it's absolute. It's absolute. All investments are nuanced. Everybody got a rule of thumb. Everything that you normally go that you function daily, or what helps you decide what you're going to do with your money, it's really rules of thumb. That's not absolute. Rules of thumb not absolute. Rules of thumb is like opinions. You should do this. This is how you should do it. It gives you a pathway, but it's not absolute. What's absolute is taxes. So if anybody has read Rich Dad Poor Dad, Robert Kiyosaki, what do you find that's very similar with people like that who drop these little gems here and there that we so often, or we often sometimes admire, right? Your Bill Gates and all these other people. I'll use Donald Trump, for example. Everybody jumped on his behind about him cheating taxes.
Shit, I looked at
Like,
it.
I didn't cheat taxes. Right. I only worked within the confines of what you created. So there's wealth that can be made without trying to reinvent the wheel. So if I were to position you, KP, a 401k versus, let's say, a long-term retirement contract, outside of an IRA or Roth or anything like that. The difference between these contracts and everything else that you commonly understand, they all come with risk.
Right.
So remember, you said hope. Let's go back to that word hope. Has anybody ever told you that there's a guarantee that you will not lose money in the market? No, you've never heard it. But you're willing to take the risk because somebody said the reward is great. And you like, you know what? I'm going to take the risk. We do it in our 401ks. We do it in just regular stock market or whatever. There's 5 houses of money. And we all probably heard of them before. We got real estate. We have insurance. We have IRAs. We have CDs, stocks and bonds, things like that. They all have attributes. They're either variable, which means they can present you with high risk. High return, but then there's a risk factor. Then you have your safety stuff, right? Which is your more fixed accounts, your CDs, your bank accounts, your savings accounts. They're safe, but they don't make no money. So that you're not interested in that.
Hey, Cal, somebody on TikTok, they want to know how can they contact you, and then I didn't even realize the time. So we well past the
time. I ain't even really digging it. Bro. It's so I ain't even digging the real meat of the stuff. Go ahead, though. It's all good.
So this is what they want. Well, the person asks how can they get in contact with you, because I got the website now, Do you have them just visit your website, or is it a direct way for them to
They can
contact?
visit my website, or they can go to Sovereign Ventures LLC on Facebook.
Okay, let me type that out for them. Because
Yep, Sovereign Ventures LLC. That's my business page. Or they can find me, Kyle Turner, on Facebook as well.
I'm writing it out. You said Sovereign, the same way that your website spelled, right?
Same way you see that. Yup. You just add LLC on the back of it. They'll find me. They'll see my big head on the front page.
And then Cal Turner, Cal
or Kyle Turner. Yup. And they'll once again see me and see my big face on the page as well.
All right, I want to put that there. I like to pop it up that way because these live on YouTube also, so people can see them.
Oh, okay.
Yeah.
Okay.
All right. So Sovereign Ventures LLC. It's kind of mashed up. Sorry, y'all, but it's Sovereign Ventures.
Sorry, they get it.
You got that.
Or Kyle Turner. Yep, on Facebook.
Kyle Turner, both on Facebook. So appreciate y'all. Thank you, TikTok. So we normally wrap it up like 11, and I realized I didn't even realize we was going over. You was spitting. So I'm sitting like damn.
Bro, I got so much look, I got so much content for y'all. We ain't even get into it. I ain't even get into the tax code.
Yeah.
That define.
We'll have you come back. So
yeah.
We pretty much how do you want to close out? Like, is it anything specifically that you feel like that you didn't get? You know, I mean, you got let's say like a 60-second closeout. Like, you got anything that you can give them?
I just say, man, at the end of the day, just if you want to move up in the world, get away from old ways of thinking. Start to challenge yourself to think outside of commonality, if you will. You know what I mean? And then determine if it fits in your life. Right? Don't be so quick that everything's a scam. And I love this analogy. Right? You might have heard it before. Scam, still confused about money. That's what it means.
I did.
And that's why. And that's where I find a lot of our community. That's where we are. We still confused about money because we ain't been taught. But we admire everybody else that's living good, but we don't even realize it's so easy for us to position ourselves just like that, just exactly where you. I don't care if you only got $100 to your name. These things can be positioned to meet anybody where they are. That's the beautiful thing about it. So. Yeah. So I appreciate you having me on. I appreciate Sharnice, Tamaya, KP. I thank you. We can really next time if you want to have me on, man, we can dig into strategy and
that's look, appreciate you. We'll definitely I'm gonna definitely shoot you something. We got a 11:30. So normally when we do the podcast, we wrap it up like around now. Then we all jump in. We got it's team Zoom time, content and growth and all our elevation things. So like I said, appreciate you for coming, bro. Everybody, if you want to reach out to him, like I said, it's down here at the ticker. And we'll see y'all next week.
Peace.
Thank you for having me on.